Good evening and welcome to this session of the live virtual classes conducted by the Board of Studies Academics of the Institute of Chartered Accountants of India. It's really a pleasure to be back here with you all again. One sec. Let me go to the query pad and just again check. Okay. One second. Yeah. Now, today we are going to see the topic declaration and payment of dividend. I already saw that Mr. Navneet Maurya is already here. Mr. Linga is here. Mr. Kuldeep Nagar is here. And many of you are here. And some of you have put. Pooja is here. Divya, welcome, madam. Welcome, Shah. Savia Khan, a lot of people have come. Thank you. And so in case I miss some of you, kindly don't mistake. But all of you, I greet you well. And let's hope we have a great learning experience today mutually. Don't think that it will be that I will only teach and you will learn. Yes, that will happen 95% of the time. But believe me, 5% you will also give me some questions, I hope, that will make me think and do some more research. And maybe we will both improve our understanding of the subject. Fantastic. So, now we have good evening, Prerna ji, Adil Khan, welcome. It's okay, good, fantastic. Now, today's topic is declaration and payment of dividend. See, after all, why does a shareholder invest in a company? Of course, his aim is that the company will make profits and a portion of that profit will be given to him as his income. That is called dividend. The amount that the company gives to the shareholder out of the profits of the company is called dividend. So the point we have to understand, dividend can be declared only out of profits. Okay, that's something you have to be very, very careful about. And we can even state it negatively by saying dividend shall not be declared out of capital. That's a very important caveat. Thou shalt not declare dividend out of capital. You can even take it as you can say it's a commandment. Thou shalt not declare a dividend out of capital. One of the important indications is when you learned share capital and debentures, if I'm not much mistaken, correct me if I'm wrong, 53 or whatever section. Some of you are good at section numbers, you can correct me. There's a prohibition for issue of shares at a discount. Am I correct? There is a prohibition on issue of shares at a discount. So when a person gives me 10 rupees per share, if I give him a discount of say 1 rupee per share, that means straight away I'm giving him dividend out of capital, yeah? And that is not allowed. That is not allowed. That is not allowed. So in that case, discount has been prohibited, but for certain well-known exceptions, like sweat equity shares, and when debt is converted into equity under the restructuring plan approved by RBI. Only that extraordinary exceptions are there. 2 exceptions. Otherwise, no issue of shares at a discount. Like this, you will find there are many situations where the law prohibits declaration of dividend out of capital. So dividend should always be declared only out of profits. Either the profits of the current year or the profits of the previous year, which is there in the P&L account, or the profits transferred to reserves. It could be any one of this, but it should be only out of either current profits or past profits. Also, there is a concept of interim dividend. We'll talk about it in detail and how it is slightly different from final dividend. Slightly in terms of who declares it. That's all. I will explain to you, you will understand it. Also, there is a declaration of dividend. Once that provision is there, there are certain conditions. Okay. Transfer to reserves is mentioned there, but it is not compulsory. You cannot declare dividend unless you provide for depreciation. We will see why, etc., etc. And very important, I would say from exam point of view, generally also, very important topic, declaration of dividend out of reserves. We will go through it. We'll also work out a few numerical examples, and let's think so. And then, of course, the little bit theory part, like unpaid and unclaimed dividend, certain durations are there by which it has to be transferred. And then there is something called the Investor Education and Protection Fund. Why it is formed, what is the purpose, from where it will get money, blah, blah, blah. We will see. So this is the overview of today's topic. Okay. Yeah. 53, correct. Thank you. Thanks for confirming, Kuldeep ji. See, Buddha ho gaya na, so my memory of sections is not that. Once upon a time, I used to know 250 sections of the old law, not section number. The body, the content, I will know by heart. Buddha. Talking about old stories. Today, I don't think I know them by heart, but principles are there. The principles are to be known. Even if you don't know the verbatim, what is there, you should know what is the principles there, what are the broad ideas, and write in your own words also. No problem. You can write in your own words. You need not use the complicated legal language, but you should communicate the concept correctly. Okay? That is what I have done in my PowerPoint presentation also. I have simplified the section in normal English, I would say, Asan Angrezi mein. I have converted it so that you can write in these easy words. Nothing wrong. So long as you communicate the concept clearly. So what is dividend? They have not defined. As usual, they give you further confusion. They say dividend includes any interim dividend. So most of the definitions in Companies Act are not definitions. Check it out. Charge also, you won't find it being defined. It will be said it's not this, it's not that, like that. So dividend includes any interim dividend. So basically, they assume that anybody should know what is a dividend. It is the return on investment for the equity holder, right? For the preference shareholder, that's a preference dividend. For the equity shareholder, it is a dividend. We don't say equity dividend, say dividend. Okay. We don't say equity dividend, we say dividend. Dividend includes any interim dividend. What does it mean? It means we are going to see certain provisions relating to payment of dividend, transfer to separate account, transfer to investor protection fund, etc., etc. All these provisions apply to interim dividend also. Any provision applicable to dividend, normal dividend, automatically applicable to interim dividend also. Don't have to ask whether it is applicable. But for interim dividend, there are certain special provisions which are only applicable to interim dividend. But all the conditions applicable to dividend are applicable to interim dividend also, inasmuch as there is no specific provision for interim dividend. So what we will do, first we will understand specific provisions of interim dividend. Those provisions will apply for interim dividend, right? If nothing is mentioned there, then all the provisions applicable to dividend, to the extent not covered in specific provision, will apply to interim dividend also. That is the meaning of the word dividend includes any interim dividend. Interim means in between. Sometimes, when you go to a movie, they suddenly, they stop the movie and say intermission. Intermission. What is that intermission? In between, interval, in a gap, in between, in the middle, something like that. Or anytime. See, interim need not be exactly half year. Anywhere during the year, we can declare a. The idea is like this. Okay, when we come to interim dividend, I'll tell you more about it. So dividend is the shareholders' return on their investment or capital in the company. But today, we are interested in dividend as a return. But I think we are more interested in capital gain. Most of us who invest in the stock market are not just interested in dividend. Though, believe me, I have invested some good blue chips at very low prices. My ROI is pretty. Recently, I calculated my average rate of dividend for all my portfolio. I took the complete cost of my portfolio and my dividend for the year. Personally, I should take 9, not the market value. Am I correct or not? Because my investment is my cost, what I spent, and I'm getting dividend. I found that I was getting about 6 to 7% average. That's because. Not because of because the prices at which I purchased the shares in 2009, 2002 were all very low. Okay. One more thing, very important. Please don't ever forget it. dividend is declared as a proportion of nominal or face value. Nominal or face value is in the memorandum they will mention 1 lakh shares of rupees 10 each. Right? That 10 rupees is the nominal value or face value. So dividend is always declared as a proportion of nominal or face value. Though for calculating my return on investment, I took my cost, which could be anything. See, when I purchased Maruti in 2009, 1,200 was my cost. But Maruti ka share nominal value hai 10 rupees. So 10 rupees is so when Maruti declares a dividend, they will say 500%. That means that 10 rupees share, I get 50 rupees per share. On a 10 rupee share, I will get 50 rupees per share. That's how I have to understand. So for 500% dividend like that. Okay. Usually it will be announced as a percentage of nominal value. So 10 rupees share is the face value. On that, obviously, if they give me 10%, 2 rupees, I don't know. So they make huge money. So what they do, 500% dividend and all that. Okay. What I stated is not the dividend declared by Maruti this year. Merely an example. AB Limited has issued equity shares having face value of rupees 10 per share. Shares are currently quoting on National Stock Exchange at 250 per share. This is the current market quotation. Company at its AGM held on 27/7/20 has declared a dividend of 20%. Mr. Shekhar owns 1,000 shares, which he purchased at 300 per share. Maybe the market was high when this guy bought it. Now it's gone down. But on what amount will he receive dividend? The 20% will be calculated on what? On 10 per share. So he'll get 2 rupees per share, which on his cost, 300 will be nothing, negligible, right? 1% or not even 1%. 2 rupees by 300 into 100, nothing, not even 1%, less than 1%. It's okay. But that is how it is. The dividend is to be calculated on face value, etc., etc. Okay. Any doubts you can keep on asking at any time. Correct. Now, this is something you already know. Merely for recollection, we are going through it. When you studied share capital and debentures, you were told what is equity share, what is preference share. Preference share again consists of two types, cumulative and non-cumulative. Meaning, cumulative, the dividend will accumulate. The dividend will be, suppose in 1 year, we do not have profit. Suppose 15% preference shares. In 1 year, there is no profit. Then that 15%, should it be paid or not? It won't be paid, but it will be provided and carried as a liability. The proposed preference dividend, or rather the preference dividend payable, will be a current liability continuing or a non-current liability, depending on how long it's due. It will be kept. Okay. And non-cumulative preference shares, in the year in which there is no profit, no dividend. Okay. As far as equity shares are concerned, dividend is dependent on the dividend policy. See, I don't know if you have this in your intermediate syllabus in finance. I don't know, but final definitely. You will have Modigliani and Miller, capital asset pricing model, of course, Walter's theory. So these are all how much dividend a company should declare. That's a finance decision. Because, see, the company is currently, let us say, earning 22% return on equity. 22% return on equity. Means what? If I take the EPS and divide it by the market price of the share, I'm getting 22%. Means if somebody invested today, he will get a return of 22% overall. Not only this thing. Okay. Or if you take only the net worth of this company, the book value of this company, and you will get 34% or 22% return on equity. Huge return on equity. Because equity will be smaller now. They will leverage on the debt, right? So they make good money. So, but obviously, the profit completely cannot be given to the shareholder, because suppose I give my entire profit every year to the shareholder, what will he do with it? Maximum he'll put it in post office, which will be 8%, 7.5%, 8% taxable. Whereas if he keeps quiet and leaves it here, he's earning 22%, which is better. Therefore, there is a question whether to declare dividend at all. It's a bigger question. The general view, the general view, accepted view is you should declare some dividend consistently. Even for going for listing, you'll find consistent dividend declaring for 3 years is made mandatory. So a consistent dividend declaring company, around 20% to 40% per annum, is seen as healthy because you own something to take home and spend. So dividend, as we saw, can be of two types. Interim dividend and final dividend. Okay. Interim dividend may be declared at any time, in the middle, during the year, before the AGM. Any time you can declare interim dividend. Final dividend will be declared only at the AGM. So from the beginning of the financial year, 1/4 onwards, you can declare interim dividend anytime. Okay. But usually what they will do now, they will have an AGM now. So in that, the previous year final dividend, they will close, distribute, and then wait. Then in October or November, September, October, November, they will declare on interim dividend based on the profitability. They will see the half yearly result. 30th September mein half yearly hai na. So based on that, they will say, let us have a small interim dividend to these guys. You'll find there are companies that do it consistently. You find MRF, every year they give 3 dividends, 2 interim dividends and 1 final dividend. See, they jolly well know what will be the profit at the end of the year. They have estimate. So based on that, they are saying, we are worst case scenario, we are going to make so much profit at the end of the year. Why not give these buggers something now? So around October they'll give. Then again around March or February they'll give. Then final dividend they'll give. Like that 3 times they'll give. Nothing wrong. Okay. But interim dividend is announced or declared by the directors. Interim dividend is announced or declared by the directors. Whereas final dividend includes interim dividend also. Please understand. I'll tell you, explain to you. Suppose a company declared an interim dividend of 2 rupees on, for example, 5/10/25. Yesterday, Sunday, but then again another 2 rupees on 4/3/25. Finally, they declare 7 rupees dividend. 7 rupees. That means what? This 7 includes this 4. So balance 3 will be paid. So that 7 rupees is the final dividend. That means what? The entire year, 7 rupees. Distributed as 2 rupees on October. These have already been announced and declared by the board and paid. Whereas this 3 has not been paid. Okay. But the entire 7 has to be declared at AGM by the members. Are you able to understand? See, the members at the AGM only can confirm the dividend. Now, another peculiar thing. The members are the owners of the company, but they don't have any right to fix the dividend percentage. They cannot fix. It is only the board of directors who decides what should be the dividend. Because they are handling management. They know what's what. They are experts in this. So they know. So the entire, but once a dividend is recommended by the board of directors, the shareholders have to approve it, the AGM. That's called declaration. While doing so, for example, if the directors have already given 2 to 4, and now they're giving another 3 and saying totally 7. 3, no. The members cannot say, no, 7 is too small. Yeah, you give us 10. No. They cannot increase 7 to 10. But they can reduce it. But obviously, since already these guys have taken that 4 rupees, they cannot go below 4. Yeah, they have to approve 4 definitely. Because they have already taken the money now. So they have to approve 4. That is why directors have to be very careful while declaring dividend, interim dividend. Because you should ensure that the profitability estimates will be stable and will not change. it usually be blue chip companies, strong companies, large cap companies. Rarely small companies will declare or medium companies will declare because their profit itself is a moving target. We don't know what's going to happen. So they would not, they prefer to wait for the end of the year and declare one dividend. Okay. So interim dividend is declared by the board of directors where the board meeting. Okay. They can do this at any time during the period from closure of financial year till holding of AGM. That means 1/4/2025. 31/3/25 accounts got closed. So 1/4/25 till 26 AGM, maybe 30th September. Till then, any time you can declare interim dividend. Any time. But believe me, normally they would not declare interim dividend up to 30th September. They would prefer to finish the final dividend of the earlier year. See, the March ka final dividend hai na balance, this 3 rupees. That has to be paid now. So what they will do, they'll have their AGM in August, declare the total dividend, pay the final dividend, and get done with it. And then 30th September, they'll see the profitability for the half year, then project it for March, then give themselves some comfort, and then they will declare a interim dividend. This is how it normally happens. Intelligent directors do this. Now, what can be the source for interim dividend? It can be declared out of surplus in the P&L. Surplus in the P&L account. Got it? Meaning, already opening balance, hai na, that. So last year accounts got audited, na, that 31st March May, some surplus is there, na, that plus profits of the financial year in which dividend is not to be declared. So the financial year is what? 1/4 to 31/3. Am I correct? 1/4 to 31/3. But suppose it goes up to AGM, then that financial year also you can take. Profits of that financial year also you can take. Okay? Profits of the financial. That's why normally they'll finish all that. And they'll take from 1/4 to 30th September of that year, and then only they'll declare. Okay. So profits of the financial year in which dividend is sought to be declared. Okay. And profits generate, and that is why normally interim dividend, they will not push beyond March. Before March, they will declare. So normally this would be the ideal dates for interim dividends. Even I have verified my portfolio and I find most of these interim dividenders give around these dates. It's convenient. Then 31st March accounts are closed. Then audit happens. Then final dividend is declared. Then they go to the AGM, get the whole thing declared, pay the balance, be done. This is the cycle. Okay. I'm giving you very practically. And the example, interim dividend is not declared by every company. Very few, a minority only will declare interim. Yeah. See, listed company, even in listed companies, 80% will only give final dividend. Blue chip companies, large cap companies, FMCG, pharma, sometimes they give interim. Because they have surplus profits. They don't keep it, they give some. And also, a good dividend declaration, it strengthens the price of the share in the market. Because the market sees this company as a profitable company and a potentially growing company. Perception. Profits generated in the financial year till the end of the quarter preceding the date of declaration of interim dividend. Friends, look at this. We are declaring on 5/10. So I can take the profits up to 30th September till the end of the quarter preceding the date of declaration of interim dividend. You got it? So 1/4/2025 to that 23/26. So profits of that financial year I can take. Okay, sir, I missed it. Now I want to do it in, say, July. Not a good idea. Still, you can. How? You can take the profits of April, May, June quarter also. Opening balance of P&L account as on 1/4. Profit for 31/3/26. Then 3 months ka profit in 26/27. The whole amount is now available for declaring interim dividend. Have you understood? I hope you have understood this. Yeah. Friends, don't ever get confused that profits. Unlike partnership, where you compute the share of profit of a partner from the profits, for a company, it's always a percentage of the nominal or face value. See, for a preference share, it is very obvious now. 100 rupee preference share redeemable at a premium of 120. On what amount will you calculate preference dividend? On 100 face value. Same thing for equity share also. That's all. Okay. Except that here the premium is fixed by the market price. Now, sir, this year we are incurring loss, heavy loss. And I still want to declare as a matter of custom. Every year I have been declaring interim dividend. But I have some profits and all that opening. The current year ka profit not there. I have some opening balance profit and all is there. So can I declare interim dividend? Yes, you can. In cases where the company has incurred a loss during the current financial year, up to the end of the quarter immediately preceding the date of declaration of interim dividend. Got it? So, for example, 30th September, I want to declare on 5/10. 1/4 to 30th September loss. Luckily, opening balance there. Some opening profit is there. I have some money to pay. Without money, I can't pay. I can't pay when there is a loss. But current year ka loss. Current financial year may loss. That's all. Okay, opening balance there. After setting off this loss, there's some amount still left. But then they say, be careful. You cannot declare at a rate higher than the average dividend declared by the company. So they say, go back for 3 financial years and calculate the average dividend rate. And then only that average dividend you can declare. See, the idea is when a company is incurring losses, it has to be financially stable to meet its liquidity requirements. Therefore, they say don't squander your money in dividend. They still, if you want to, as a consistent policy, declare. Because see, this loss may be a cyclical thing. You might again make profit. So you want to be a consistent interim dividend declare. Agree. But the rate or average dividend, you cannot declare more than the rate higher than the average. So, for example, I'll give you one example and then, Pet Limited incurred loss in business to current year of financial year 17-18. If you think it's a very old question, you change, you change the date to 25-26. What is there? For you, it will be 25-26 or 24-25. 25-26 mostly. So the company, you just change the date. What is the date? Won't change because the law is the same. Merely because the date is 17-18, the question will not become wrong. Okay. But for some cases where there is an amendment and all, you have to be careful. Otherwise, the company has declared dividend at the rate of 12, 15, and 18 in the immediate preceding 3 years. In spite of the loss, the board of directors of the company have decided to declare interim dividend of 15% for the current year. Stating the provisions of declaration of interim dividend, say whether they are right. Is the decision correct? Can you give an answer to this based on your knowledge now? You can answer. This question was asked in May 2018, carried 4 marks. Yeah, I will try to explain, but let us see. If the articles provide, you can pay dividend on partly paid shares also. Kuldeep ji, if the articles are there providing, you can pay on the paid up portion of the partly paid shares. Nothing. Only on the paid up portion you can. Nothing. It need not be fully paid. Correct. So average is correct. Let me see, because I don't see any lack of clarity here. It is so simple. Anyway, I don't have a diagram with me. I will try to. Navneet Maurya says it cannot declare more than 13%. How does he get it? How does he get it? Mr. Navneet Maurya says 13. How does he get 13? 15, sir. Maurya ji, you total these three. 12 plus 18, 30 है ना? 30 plus 10, 40 plus 5, 45. 45 divided by 3, average, na, is 15%. Okay. Have you understood, sir? Therefore, they want to declare 15. So all they're saying is, you cannot go beyond. See, there is no big cycle, ma. Interim dividend is nothing. See, let me draw a diagram, but it's not so complicated as you think it is. See, sorry. Here's a line. Okay. Let's draw here 31.3. Another 31.3. Am I correct? Rather, let us call this 1.4. That will be easier. Let us call this 1.4. No. So this is one gap. Then we have another point which is called AGM. Now, please note that there is an overlapping here. Overlapping. Normally, as you are aware, AGM should be held within 6 months from the end of the financial year. So last date could be 30th September. Extension and all is there. Let's not go there. Assuming that they hold it, maximum date is 39. So now for this period, already for up to here, up to 31/3 this year, I may have declared interim dividend, blah, blah, blah. During this period, during this year, on 39, I would have an AGM. So before that AGM, I would declare the final dividend for this period, this period. That will be paid. So, but for the current year, for sake of clarity, let's call it 25, 26. The current year 25, 26, I can declare interim dividend any time in this time. At any time I can declare. This whole period, any time I can declare. That's all. So that's about it. I'm only giving you dates to help you understand. No, you want to declare a dividend here itself, you go ahead. No problem. You want to declare here, go ahead. You want to declare till AGM. But usually nobody will do that. Why? Because already I have declared 2 interim dividends. Now the last year will get over. It's common sense, ma. There's nothing complicated. Auditing will be going on, blah, blah, blah. AGM will be held. So current year dividend, I'll get it approved at the AGM, close it. Then the last year got dividend, I'll close it. Then 25, 26 profit, I will know na half year. 30th September only, we will know where we are. Based on that, I will decide, okay, some money is there. Let me pay some interim dividend. So most probably that will be paid in this gap. Again, I will not want to go beyond 31.3 because accounts will be closed on 31.3 when I will have to anyway propose a final dividend. So I would rather interim dividend, I would like to keep it in this period. This is common sense. But as far as the law is concerned, you can declare interim dividend anywhere in this gap. Okay. So this is what it's all about. To the best of my knowledge, I have explained it to you and hope it's clearer now than it was. Yeah. So thank you, Navneet, you understood. Thank you, Mr. Kuldeep. See, but there is another cycle that we have to see. That is the time within which it has to be paid. So if dividend declared in November 6, okay, can they take profit till 31st October or till the 30th September? Quarter. End of the quarter. Okay. End of the quarter. Profit generated till the end of the quarter. End of the quarter. Quarter means day ending on June, September, December, March. These are called quarters. Okay. So October is not yet, technically not a quarter ending. So thank you, Mr. Anubhav Malik. Now, okay, now moving on. See, very important. See, many board of directors, what they will do, quietly they will announce a interim dividend, thereby boosting the price of the share, creating some big hype and all that. But afterwards they won't pay. Maybe they'll pay it finally. Maybe. they will pay. So the law is very strict. Look here, you have declared a board of directors. Either have you declared it? Haji. Then pay. No, 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 no. What? No, no. That money you can't use. So within 5 days, you transfer it to a separate bank account so that it should go out of your control. Someone can see what happens. If they will say, yeah, we will pay. Then they'll continue to keep it in the regular account and earn minimum. They'll save interest on the CC. So if they say this is not your money, is OPM, other people's money. So within 5 days, note it, your honors, within 5 days, you should deposit it in a scheduled bank, in a separate bank account, not pay. Later on, you will see that dividend on declaration by board or company should be paid within 30 days. That will come later. Now also I'm repeating it. Later on I will again say. Because final dividend will be paid within 30 days. Should be paid within 30 days from date of declaration. So interim dividend includes interim dividend. Therefore, interim dividend also should be paid within 30 days. So within 30 days. But the minute you declare it in the board meeting, from that day, within 5 days, you have to deposit it in a separate bank account, scheduled bank. Okay. This is the only exception is government company, where the entire paid up share capital is held by central government or by any state government or governments or by the central government and non state governments. Entire share capital. Please note it. Sorry. Please note it. Entire. See, these are small things that you have to note. Entire. Note it. See, suppose you are having your institute material, you are having a highlighting pen. You are having a printed institute material and a highlighting pen. Highlights. So that when you again prepare, it will catch your attention. Entire period. Or if you are taking notes, then write it in caps and underline. But don't take notes here, because listen to me, Suniaji, as I'm talking, Shravana. Then apply your mind and concentrate on what I'm saying, Manan. Thereafter, read from the material so that will become a second revision. That's all. If you do it with concentration, chances are you will never forget company law. So don't worry about that. So, see, just for the sake of propriety, we try to distinguish between the two. First of all, interim dividend is declared and paid during an accounting year. That is before the AGM, before the finalization. Final dividend is recommended by the board of directors and approved by shareholders at the company's AGM. See, as per the law, interim dividend can be declared from the 1st of April, from the closure of the financial books to any time till the AGM is held. But final dividend is only done at the AGM. It is recommended by the board of directors and approved by the shareholders. And very important point, final dividend, when I announce it, they will include interim dividend also, so that you what I see, if you want to understand this better, best thing is you take MRF annual report or TCS annual report. I think they all declare interim dividend. What you do, you go through the director's report. Already, within that director's report, one of the paragraph will be, your directors are pleased to announce a dividend of rupees 10% dividend on your 6% already having been paid as interim. The balance 4% will be paid now. So the total is 10%. Check it out. Or they might say, your board of directors have already declared an interim dividend of rupees whatever. Now we are pleased to declare a final dividend of 4%. Okay. So the totality has to be approved by them in the AGM. If suppose they want to reduce it, they cannot go below the interim dividend. Yeah. Because they took the money now they can't say reduce, then they have to give it back. Nobody will do that. So minimum you approve that. So even then you have to be very, very careful, sir. I'm sure some of you are thinking, sir, they are declaring interim dividend. After that, something happens. They incur heavy losses. What happens? At the end of the year, what happens? It's a big problem. Because the directors have no business declaring a dividend when there is no profit. So Directors have to be careful. That's all. If you want to declare interim dividend, be 200% sure that there is a huge surplus with you and that nothing will happen to it. Otherwise, don't take a risk. So that's what I would say. There's no other better answer than what I can say. Okay. Because if so, then you will technically the directors having declared the dividend when there is no profit, they are bound to repay it to the company. That's all. Because see, the shareholders have taken it and gone. Now they can't pay. Okay, they can't be made to pay. So the directors, the company will sue the directors, and that's how it should be. Okay, this is the legal position. You're very, 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 very particular about it. But don't go there, yeah. Don't declare. See, somebody, my client were to come and say, look here, you're already in a precarious position. We don't know what will be the profit at the end of the year. We are seeing some little profit now. Don't declare dividend and all. Wait. Don't declare interim dividend. Wait. Here and we will see. If you have enough money, one dividend you declare. This is the advice a seasoned finance professional or a CFO or a member of our institute who's in practice would give to the board of directors. Okay. That is because we are our institute believes in conservatism and prudence. So prudence should always guide you. And here, prudence says don't do this. Don't do it. Okay. Announcement. Announced by the board. Here, it is recommended by board and approved by shareholders. Time of declaration before preparation of financial statements. Are you able to understand? Normally. Whereas final dividend is done after preparation of financial statements. Okay. Revocation. Sir, interim dividend after declaration can be revoked with the consent of all the shareholders. It so happens. But final dividend once declared cannot be revoked. Maybe the shareholders can abandon it, but it cannot be revoked. Which is why dividend decision is a very careful decision that the board has to take with much deliberation. Interim dividend can be declared only when the article specifically permits the declaration. But final dividend is a matter of right. See, if you remember from your management and administration topic, final dividend is declaration of a dividend at the AGM is an ordinary business. Hena, one of the 4 ordinary business at an AGM is declaration of a dividend. Okay. So that is a sort of, it doesn't need any provision in the articles. This is the multiple choice type. So the answer is correct. You all given 15%. That's the correct answer. So this is the answer to that question. This is another question. 3 marks. Alex Limited is facing loss in business during the financial year 18-19. In the immediate preceding 3 financial years, the company had declared a dividend at the rate of 7% or 11% and 12%. Board of Directors has decided to declare 12% interim dividend. Can they do that? Is it valid? No. No, correct. No, 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 correct. You are all absolutely correct. See, 10, 20, 30, 30 by 3, 10%. Maximum 10% only can be declared. Okay. Now, some of you may have a question here. I am waiting for that question to come from you. I can ask and answer. You are all absolutely correct. You have understood this concept well. I'm happy for that. But some of you may have a technical question. What could that be? What could that be? You could ask me, sir, suppose in the last 3 years, they have not declared in 2 years or 1 year, they have not declared. Then what do I do? See, for example, we are now looking at 25, 26. Now, so I have to look at dividend declared for 25, dividend declared for 26, 24, 23, 3 years. Suppose 23, no dividend. Suppose 23, no dividend. 24 May, I declared in 24, I declared 20%. right? 25, I declared a 24%. 23 May, nothing, no dividend. Sir, how to find, sir? Anybody can give me the answer for this? What will be the average in this situation? What will be the answer? What will be the average? In this example, 23 0, 23 0, 24 20, 25 24. Let's see. Mr. Ashlesha Rao has the correct answer. And also Sama Khan. No, we won't take zero. We won't take zero. Zero is not correct because, see, it's not as if they have not declared dividend at all. They have declared zero in 1 year, 20 in another year, 24 in another year. Therefore, 0 plus 20 plus 24 by 3, 14.666. It will be a recurring decimal. 667, 67 you can say and close it. Okay, whatever. It will be a recurring decimal. Can't declare is not a correct answer. Okay. 14.66. So my suggestion would be 14.5. Okay. So 14.66, yeah. What is that? 14.66. Not 67, 66. It will be. Okay, this is the answer. Hope you got the point. This is a very, very trick question. I doubt if it will be asked in the exam. Only out of. See, usually students will ask me. 0. See, 25 0, 24 0, 23 0. 0 plus 0 by 0. 0 plus 0 plus. See, please, Your Honor will note it. So we have to see the immediately preceding. So Vedant Tiwari's question, 25 is the latest year, 24, 23. So 3 years. So in these 3 years, 0, 0, 0. So the answer is 0. So you cannot declare is the correct answer. There you cannot declare. Because all the 3 years, 0, 0, 0. Okay. Clear, Mr. Tiwari? Have a good question. But then you can keep on doing permutation and combination. Yeah. The principle you understand. That's all. Okay. When I say average, then I have to take 0 as a number and divide by 3 and not 2. But when you come to declaration of dividend out of reserves, you'll find they give a different story. Be careful. Declaration of dividend out of reserves may, in case, when we come there, I will again stress it, but just as a comparison here. Here, you have to take the average, come what may. There, they say, even if in 1 year you have not declared a dividend in the past, then this condition will not apply. Straight away, you go to the next condition. The condition itself will not apply. You can declare a dividend, but this condition of rate control will not be there. That rate provision will not be there. You move to the next condition. That's there. Whereas here, no, you have to calculate the average. So in that case, this would be 0 plus 0 plus 0, 0. Okay. Now, for main dividend, final dividend, the sources, profits of the current financial year, if you're providing for depreciation, we'll see why. See, providing for depreciation is a very, very esoteric topic. If you are interested, I can explain. Otherwise, I'll skip. But if you want to really become smart and intelligent chartered accountants, you should understand, first of all, what is depreciation and why dividend is linked to depreciation. See, they are saying, and this is very important from the auditing point of view also. In auditing also, you will get this topic, you will get a question in auditing. Check out. In company audit, this is one of the important topics that they will cover. At least in those days, and I think now also. So, profits of the current financial year, but after providing for depreciation in accordance with Schedule 2. Okay, I'm going to ask this as a question to you. Why should I provide for depreciation before declaring? And not this is not a general question. Don't immediately educate me, sir, for because of this, that, and all. I know what. Why should I provide for depreciation before declaring dividends? What is the connect? Anybody can guess? It's an open question. Then I will explain it. Yes, I will explain, but if you can think of it, I'll be happy. Sir, what is depreciation? Depreciation, now we have clearly understood what is depreciation. Depreciation is nothing but distribution of the cost of the asset over its distribution of the cost of the asset over its useful life. Correct? Distribution of the cost of the asset over its useful life. Great. So, the cost of the asset, you call it WDV, call it what you will. 100 rupees I paid to buy that asset, yeah, over its useful life. 100 minus maybe there is one, if there is some scrap value, minus that. Should be written off in my P&L account, yeah. Are you able to understand? Suppose I don't do that, what will happen? Let me show you. Let us hope I'm able to communicate it correctly. Balance sheet. See, this I will only teach to CA students because non-CA students cannot appreciate this. This is not a law concept. It is an accounting concept. Linked to law. Friends, I want you to think of a imaginary company. That imaginary company is having 100 rupees share capital. 100 rupees share capital. 100 rupees fixed asset. Very simplistic. 100 rupees fixed asset. So company starts investing 100 rupees. That 100 rupees is used to buy 100 rupees fixed assets. Now, beauty of this company, every year, it makes money. Let's say that year 1, it made a profit of 10. And so on and so forth. So in that year 1, the board of directors of this hypothetical company, no company will ever do this. Hypothetical company, you know what they are doing? The entire 10 rupees, they are declaring as dividend without providing for depreciation. Are you able to understand? Without providing for, or maybe we'll have it slightly higher also, 100 rupees. They declare the entire 100 rupees as dividend. So, at the end of the year, 100 rupees profit, immediately paid. Balance sheet looks exactly like this, year after year. Think about it. Year after year, it looks 100 rupees share capital, 100 rupees share. But now, as a chartered accountant, you will understand what's the problem here. Fixed assets are not truly represented at their real values. They are represented higher than their value. Why? Because you are not provided for depreciation. Right, sir? 5 years we do this, sir. 5 years we do this, sir. Okay, we make 100 rupees, 150 rupees, declare dividend. Shareholders are happy. Now, at the end of the 5th year, the company goes into liquidation. No other asset in the balance sheet. Only fixed assets. Now the liquidator sells the fixed assets. How much will he realize? He will not realize 100 now. He will not realize 100 now. Maximum he will realize 40. After all, see, it's a 5 years used asset, yeah. 40. So which means what? The remaining 60, that remaining, 100 I have to pay to the shareholder now. Remaining 60, how I can pay? I cannot pay. I have to only do like this one time. Sorry. Okay. See, the point here is they won't get it. That's gone. Okay. Now, that means what? Friends, when we began this lecture, I told you one commandment. What was that commandment? Thou shalt not declare dividend out of capital, which is what you have done. By not providing for depreciation, this company, by giving the entire amount as dividend, without providing for, see, this entire amount as dividend, I'm giving it as an example to make you understand it better. If you don't provide for depreciation and you declare a dividend, to that extent, the asset will be overstated in the balance sheet. Correct? At the end of the life of the company in liquidation, the asset will not realize. So, in other words, by not providing for depreciation, to the extent of the depreciation not provided, you are declaring dividend out of capital. Therefore, the law says you cannot declare dividend unless you provide for depreciation. Of course, there are other prudential reasons why we provide for depreciation to retain the asset cost in the books so that I can replace the asset after its useful life. Definitely, no doubt about it. But the accounting and finance principle behind this, coupled with company law principle, is if you do not provide for depreciation, the asset will be overstated in the balance sheet. If dividend is declared without providing for depreciation, to that extent, there will be a declaration of dividend out of capital. It's a little esoteric, I do agree. Those of you who are sort of able to grasp it, I'll be happy. Others, very. See, 60 is not a loss, boss. It has not been provided at all. It will be a final loss. Finally, when the shareholders comes, no, they will take. See, the shareholder will take the dividend every year when you declare. He won't think, hey, have you provided for depreciation? No, who is he? They are Amadmi. They don't. They're getting money. They're taking home. Finally, when the company is liquidated, they'll come. Give me 100 rupees. Where will go for 100 rupees? That is why the law says no. Provide for depreciation. So this is the reasoning behind it. I know this is a little esoteric. See, when I wrote my book for the CA final, at that time CA final declaration of dividend was in CA final, in the old law. It was in the final syllabus. So when I wrote my book for CA final, it was published by Snow White publication. I made this in my chapter on declaration of dividend. Also, when my guru, Professor K.S. Anantaraman, his book Lectures on Company Law was revised about 22 years ago, 24 years ago, when this chapter was not there. Accounts, audit, and dividend, these three topics were not there. He called me, my guru called me and he said, Srikanth, you write that chapter. I fell at his feet and I said, no, sir, how can I? I'm a useless fellow. How can I when you are there? He said, you write. So I started writing. I kept my guru's photo in front of me, praying continuously. I wrote my guru wrote it through me. And finally, this one topic I included on my own. And I showed it to him. He said, it's very complicated. Why are you including? Because he always believes in simplification. But I said, sir, those students who appreciate, let them read. And if they appreciate, I'll be happy. Like that. So all certain and intellectual satisfaction is also needed now. So we can't oversimplify and make it, we can't dump it down. So those of you who are able to appreciate this, good. Otherwise, nothing is going to happen to you. Okay. Simply remember, you cannot declare dividend unless depreciation is provided. That's all. Provide depreciation based on the useful life of the asset mentioned in the Schedule 2. That's all. Okay. Now remember, suppose in any previous financial year, there is a profit, but that was not, there was no depreciation provided. Then that depreciation or loss has to be adjusted here. Okay. And profits of any previous financial year also can be considered, provided it is arrived at after providing for depreciation in that year. Okay, so depreciation becomes very important and closely linked to declaration of dividend. Very surprising. So if I have bored you or if I have confused you, I hope I have not confused you because you're all chartered accounting students. You should be able to. Other students may not be. Other people cannot. You should be able to understand. Okay. Chalo. Now, so profits of the current financial year, previous financial year, in both cases, after providing for depreciation, both A and B. It's not either or, it's both. Lastly, in some cases, the central government may give a guarantee and say, you do this activity. In case you incur loss, I will guarantee the payment of dividend on that loan. Something like that. So whatever it is, money provided by the central government or state government for payment of dividend, guaranteed by that government. Okay. Why would they do that? Maybe it's something very vital, maybe in a pharma company. So the pharma company says, sir, you are asking me to bring in another 100 crores. I will bring, but something happens, what to do? Okay, in case you have no money, or maybe government company, so they will guarantee the dividend to the shareholders, other shareholders, whatever. Sorry, my mistake. Sorry. Yeah. So now, how to calculate profits for dividend? Okay, dividend should be declared only out of revenue profits. But we'll be a little careful here. But by and large, you should declare dividend only out of revenue profits. You should not declare dividend out of capital or notional profits. But there's one notable exception. One notable exception. But as of now, understand. For example, if there is any capital reserve arising on amalgamation, cannot be used. If there is any capital reserve arising on forfeiture of shares, cannot be used. Are you able to understand? So these cannot be used for declaration of dividend. They are all capital profits. Similarly, gain from revaluation of assets. So pure notional. Revaluation of asset is a notional. The asset is currently WDV. The asset is currently showing in the balance sheet at a written down value, which is depreciation, etc. Cost minus depreciation. Whatever it is. See, you can rework the depreciation. If you are currently using a straight line method, or WDV, you might go for SLM. Little bit tweaking you can do, but remember, whatever you do, it is to be disclosed and adjustment has to be made. So, what is the big deal? But still, you can play such gimmicks, whatever it is. Okay. The asset is shown at a certain value. That is the value of the asset, rather the cost of the asset, historical cost. Now, what you're saying is the market value of this asset is 200 crore. I'm showing it in the balance sheet at 220 crores. Mr. Srikanth, I want to improve my balance sheet. I don't know what. I want to make my balance sheet look more healthy. Make profits, yeah. See, the healthiest balance sheet you want to see, healthiest balance sheets. Most of the FMCG, Ashok Leyland, all that you go and see, Maruti Suzuki. So you know what you will find in the balance sheet? Of course, fixed assets will not be there. But more than that, you will find non-current investments. Treasury will be there. Huge investments will be there. Non-current investments. Then if you look at the liability side, you'll find reserves will be huge. The earlier profits of the earlier year will be huge. That will be invested in the business of the company. Beyond that, there will be surplus. And that will be kept in treasury investments and all. Or maybe it will be invested in good companies, but mostly treasury investments will be there. You'll see in Ashok Leyland, Maruti, Hero Honda, Hero Motors, Hero Motorcorp. You'll see all this. In all these companies, you'll see cash surplus will be there. Huge amount. And they'll park it in income earning securities. Those are healthy companies where they have regular liquidity, huge money, they make a lot of profit. Extraordinarily good companies. I'm not trying to comment about any specific company. As future chartered accountants, I'm saying how to identify healthy companies. It is not by revaluing the fixed assets, but by building the reserves. And to that extent, the reserves will be represented by either fixed assets by expansion of the business or treasury assets. The balance sheet will be reflected. This is my understanding. If somebody invests in these companies at prices that are attractive, they will never regret it. That will never go down. The company will keep on doing well. Okay. So revaluation is just a window dressing. But so gain from revaluation should not be considered for declaring dividend. Notional gains. For example, in your researches in accounting standards and maybe later on in India, you will come across many situations where the standards want you to create certain notional gain and notional loss. It won't be real, but only for complying with the standard, you will have to make that gain adjustment. So there is a notional gain. It is not real gain. When it will become real? Only when the share is sold. Only when the the event occurs. Till then, it's only notional, but for disclosure purposes, for computational purposes, the standard will say, for, shall we say, better conservatism and prudence, they will say, better you account it now. So that is notional. Those notional gains, which are not realized, cannot be taken. Similarly, unrealized gains cannot be taken. But here is where one important exception is there. Friends, suppose the company has a huge capital asset, land and building, etc., that is sold. And that realizes a huge surplus. No doubt it is a capital profit, but it can be used for declaring dividend. There's only one exception. Capital profit arising on sale of assets realized in cash. That's a very important condition. So I got the money. Now that money, what I will do, yeah? I invested in those days and I getting some income, etc. I'm giving it. But the capital asset is huge value. Why keep it with me? So I sell and I declare dividend and I give it to him. I pay the capital gain tax and give it to the shareholder. You do whatever you want with it like that. Quite possible. So that part alone, you can declare dividend. Recently, I had one case where a group of entrepreneurs, they invested in a nice land. Idea was to set up a common treatment plant for waste treatment plant, effluent treatment plant. But that never came through. But the land value kept going up. So finally, separate your company, sell. No. You want the company to continue. Then you sell the land. Then how can we take it? They declare dividend and take it. Yeah. What else? Can we declare dividend? Yes, you can. You sell it for cash, release the money, put it in the bank, show it in the P&L account. That's it. Nothing. So it is, when we say capital profit, what we mean is profits that are not revenue in nature. Rather, capital profits which are not realized in cash. Okay. Please remember this. Capital profits realized in cash can be used. In case you have not provided for depreciation in previous years, you have to provide now. I already mentioned to you. Similarly, if in any earlier year there is a loss, not adjusted, now you have to adjust it against the profits of current year. But if this is for the current year. So what happens is the P&L account balance should be reduced if it is a loss. Okay, if it is negative. Finally, what is there is the profit available for declaration of dividend. Now, dividend shall be paid by the company only to the registered shareholder, none else, the registered shareholder, or to his order. To his order means in bank or to his banker, and shall not be payable except in cash. See, boss, this is there in section 123. But today, for a listed company, SEBI guidelines, see, remember one more thing. Listed company has to comply with company law. But as a listed company, it also comes under the purview of SEBI and also under the stock exchanges. So it's a triangular thing. You have to comply with basic company law, which you are now learning, plus SEBI guideline to the extent it is applicable, if any. Also, listing agreement. When you got your share listed in a stock exchange, the company would have signed an agreement with the stock exchange. That is called listing agreement. If you remember, there is one corporate governance report certified by a chartered accountant. That is under clause 49 of the listing agreement. Standard listing agreement is. Yeah. So certain conditions are placed on the company. And one of the important condition is for a listed company, all shares should be dematerialized. You know that. You already studied it. Dematerialization. All shares should be dematerialized. For that purpose, you should have a DP account, depository participant account, which is linked to a depository, CDSL or NSDL. Now, all your shares will be held in the DP only, DP account. Dividend will also, see, when you open the DP account, they will ask you for a designated bank. One or two, they will ask. You give that designated bank account. Then, any dividend which is declared by the company will be transferred only to the designated bank account, which is linked with your DP account. So that way, if you're a listed company, then there is no question of a cash order and all. only to your designated bank account, not even to any other bank account. See, earlier, when the dividend warrants were all printed and sent, there were many frauds and all sorts of problems. One, two, unpaid dividend came because many shareholders gave wrong address. Why they gave wrong address, God only knows. Or they could not, they opened one bank account. In that bank account, they no operations. And later on, when this check comes now, it is payable only into that bank account like that. They go and deposit, it doesn't get paid. All sorts of nonsense happens. So now they said, no, one of your active accounts you designate automatically. So today, technically, unpaid dividend cannot come. Technically, because if you are holding for a listed company, it cannot come. I mean, this is my humble submission. Unless that bank account which you designated to the DP got re-KYC, you have not done. Gone. Then re-KYC, you have not done. The banker, sorry, I have highest regard for the honorable gentlemen who run banks today, but they are sadists, specializing in sadism, torture. They will keep asking re-KYC, re-KYC. They say, boss, I've been your customer for the last 25 years. There is an account in Canara Bank. The number is 4564 in my area. I opened that account when I was 13 years old. When I was a minor, my father opened it for me because myself and my friend, we purchased 10 rupees lottery ticket, Rajasthan. And it so happens in Shukran or Guru was favoring me. So my friend and I, we got that 500 rupees. In those days, I'm talking about 1978, I was 13 years old, roughly, 70s. No, 78. When I got 500 rupees, it's a huge amount. My father immediately took the money from me. He said, no. We went to the lottery guy and we gave the lottery. We kept it very carefully. And he said, show the money. When he said, if you go all the way, and he took some small commission and he gave the 500 rupees minus 20 rupees something. He gave 480. We also said, thank you. For us, it was a fortune. So I gave 240 to that, my friend, and I took 240 rupees. And both of us went, but he was very conservative boy. Immediately, he went and deposited in his already existing bank account. My father immediately said, see that boy, how intelligent he is. You are a waster, give the money. So he opened this account, 4564. Why I'm telling, such an account. I've been a customer for so many years, pre-KYC. I said, you don't know who I am? I was born and brought up here. I grew up here. You don't know me? I said, don't talk all this, sir. My computer does not recognize you. Like that. So in those cases, what will happen? The bank account will get frozen. So suppose the account is frozen, nothing can be done. The check will come. They will send that instruction. It will result, no, bank not cooperative will come back. But that also is rare, very rare, very rare. It can happen. It can happen. Anyway, other than that, I don't see anything. So this condition regarding cash, etc. And when they say cash, remember, cash, when used in the law, means check. Cash includes the check. Do you remember your accounting standard 3? Said check, cash and cash equivalent. So this is, when you say cash, we mean check, bank balance also, and check also. Okay. You can't pay in cash. You remember, the Income Tax Act prohibits payment of dividend in cash. While declaration of dividend does not affect the company's power to issue fully paid up bonus shares, such shares cannot be issued in lieu of dividend. You cannot say, hey, this year we want to declare 50 rupees per share. Okay, but we won't give that to you. Instead, we'll give you 5 shares of rupees 10 each. No, 50 rupees, give cash. In addition to that, you want to give me 1 share for every 5 shares for every 1 share or whatever, give me. But this cannot be in exchange of that. Okay. Payment of dividend in cash includes payment by check or warrant or in any electronic means. Right. The directors of East West Limited proposed dividend at 15% on equity shares. The same was approved in the AGM and annual general body meeting held on 24th October 2018. The company announced 28th September 2018 as the record date. What is record date? I'm sure some of you are aware. See, record date is announced by the company for certain events, shall we say certain events that are affecting the shareholders. For example, dividend, issue of bonus shares, issue of right shares. For all that, there will be a record date. Meaning what? They will announce a date. Anybody who is a shareholder member on that date only will be entitled to that dividend or bonus or. So if you skip the record date, you lost. Suppose you purchase the share on the day next to the record date, you won't get dividend, you won't get bonus. Whatever. So for dividend, bonus, buyback, rights issue, like that, for all these events, they will announce a record date. So this company announced a record date 28th September. Directors declared the approved dividends. Mr. Binoy was the holder of 2,000 equity shares on 31st March 2018. Fantastic. But he transferred the shares to Mr. Mohan, whose name has been registered on 18th June 2018. Right? Who will be entitled to the above dividend? 2 marks, yeah. Just like that. Just like that. Just like that, 2 marks. Don't underestimate 2 marks. I will never underestimate 2 marks. And that too, 2 for 2. If you write it correctly, 2 for 2. See, you definitely boundaries are good. Definitely sixers are excellent. But once in a while, you need to get those two runs also here. Then only your run rate will go up. Mr. Mohan, correct. See, capital profit not realized in cash means, I gave you an example, now capital reserve, which is arising on amalgamation. When you come to amalgamation, you will understand. So these are all calculated, but not paid. Instead, you will get the asset. See, the fair value of the assets will be there. The fair value of the liability. The amount actually paid as purchase consideration will be lower, in which case you would get capital reserve. But it's not that you're getting it in money now. It's just that you're paying less than the intrinsic value of that company. So notional. So these are all capital profit, not realized in cash. Okay. Generally, if it's capital, be careful. Rather remember, if an asset is sold and profit realized in cash, you can use it. That is easier to remember. Yes, Mr. Mohan will get the dividend. Mohan, all of you are Mohan. Correct. Reasoning given by Mr. Ashlesha is also correct. On the record date, who was the shareholder? Mohan. See, these are all just, I don't know what type of question this is. It's there, it has been asked. So if I ask you, you will think it's too simple. It has been asked. If I see a question like this, I will sing Hallelujah, that, and I will immediately start writing. God has given me bonus. Just like that. Srikant, Lelo, like that is giving me marks here. Why should I not take it? Okay. You're all correct. Now, only one point you should remember. There is no compulsory transfer of profits to reserves condition. See, it is left to the discretion of the company. That means the board of directors. When they say company here, they mean board of directors. See, it's the board who has to decide whether to transfer. See, again, you are all experts in accounting and finance and all that. I'm even shy and afraid to even talk to you. But still, what is the difference between a surplus and a reserve? Surplus and a reserve. See, in my wallet, I'm having some cash, right? This is my continuously earned profits. Example, in my wallet, I have some cash. Now, I'm going to go for a tour or something, or rather, I'm going out, and I feel that I may spend all this money. I'm a spendthrift, as I already, my father himself knew that. So I enjoy, I go to the bar, do this, do that. Suddenly, there will be nothing. Therefore, to be on the safe side, I take some portion, 1,000 rupees. And what I do, I put it, see, I'm taking it out and putting it in another compartment. See, instead of the main compartment, I'm putting it in another compartment. And I'm calling this compartment general reserve. This is P&L account. This is general reserve. Okay. So general reserve, I'm keeping aside for safety. Of course, the entire money is in the purse only if I want to get it. So, but now that I put it in this compartment, I cannot touch it. Are you able to understand? Whereas this is openly available. So this transfer, why do I do that? Again, why? Because prudence. Prudence. Reserve. Reserve means to keep aside for some contingency. See, those companies which created, I told you now, if you want to know whether the company is profitable, then look at its balance sheet. Do you see huge reserves? Not capital reserve, not CRR and all. Even CRR is okay. Capital reserve, after all, it's free reserves transferred on redemption of preferentials locked up. You cannot declare dividend out of that anymore. So these are good. Free reserves, general reserve, P&L account balance. Wow. And look on the asset side. You see healthy growth. What you do, you see for the last 3 years, what is the reinvestment in capital, capex reinvestment? Has the company been expanding? In corporate, in company valuation, we do that. I will always see for 10 years, I will see how the company has reinvested. See, if they say they make 100 rupees every year, they declare 20 rupees dividend, that's a payout. Out of the remaining 80, I'll check, are they reinvesting at least 50% back into the business in terms of assets, expansion. See, simple, sir. This year you are making 4 lakh cars. Based on that, I have computed your profitability. Now, next year, if I'm going to give you a growth, you have to make 4 lakh plus another 50,000 cars at least, or double. So your capacity should be growing. So if your capacity is not growing, how I can project it? When you come to valuation, you will understand it. Therefore, reinvestment in capex is very important. That is a good sign. Good reserves, reinvestment in capex, sufficient liquid non-current investments. Wow, that's a rich company. In fact, with your permission, I will share with you a comment I heard from a very famous chartered accountant from South India. This man is a member of all the 3 institutes. He's a rank holder. Okay, I will not tell his name. He joined a company, an automobile company. Okay, if I tell it's a truck manufacturing company, immediately you know which company. Okay, and some of you may even know who it is. Truck manufacturing company. He joined as an assistant manager internal audit. That's all. Assistant manager internal audit, first employment. Never quit that company. Chartered accountant, company secretary, cost accountant. Slowly he grew till he went on to, what designation he got in Ashok Leyland? Ashok Leyland CEO, Chief Executive Officer, not CFO. Mr. Sesha Sai became CEO. I used to be a faculty for their management development center. So once, during the peak recession, the recession was at its height and the automobile industry was going through a doldrum. And the company, Ashok Leyland, was actually not operating 3 shifts. They were, in fact, not weekly, they were having 2 days off. But Mr. Sesha Sai used that opportunity to re-equip his managers. So he sent them to the management studies development center and called faculty like me. We taught them strategic cost management and all that. Now, at the end of that 2-year, MS from BITS, where I was a faculty for BITS, teaching Ashok Leyland executives, these people were, convocation was there. Then Sesha Sai came and he gave them an address for about half an hour. I was there in the front row as one of the faculty, etc., etc. He said, you guys don't worry about money. We are a deep pocket company. We are a deep pocket company. What a deep pocket. So we got a lot of money. We can easily overcome this. Don't worry. But in the meantime, you guys, whatever you learned here, you go to the factory and implement it. Reduce the cost. Bring the cost down. Improve the efficiency and make the company profitable. Which is, I still remember this comment by Mr. Sesha Sai, who is now the chairman emeritus of the group. It's the company is owned by, you know what? It's a Chennai-based company owned by Hindujas. And such a, just I thought I will tell this for two reasons. One, all of you are aspiring to become chartered accountants. Here is the example of a epitome chartered accountant. This is a man whose history you should study and whose biography, there is no biography. Read it on Wiki. I'm sure there's a Wiki page for him. Read it and be inspired by him and emulate him in your career. You will never go wrong. This is the point. Okay, this is my humble view. Okay, so I always give Shreyas Iyer, a lot of people like that. Of course, our late lamented president of our institute who recently passed away, my good friend, I should say, and of course, my sort of my senior in the profession, who CA Padma Shri, CA T.N. Manoharan, is another role model. See, so our institute has produced so many role models, and you should take their history and see and be with them. Of course, every region has produced. My region is Southern region. I'm giving you Southern region examples. I'm sure every region has similar people who, are extraordinarily brilliant, ethical, grounded. Sorry for this, as usual, slight away from the topic, but think about it. So the point I was making was Ashok Leyland is a deep pocket company. So they have transferred money to the reserves. But this is not compulsory. It is left to the discretion of the company. Therefore, a company is free to transfer any portion of its profit to reserves as it may deem fit. It may also decide not to transfer any amount to reserves. See, here's the case. YZ Limited is a manufacturing company and has proposed dividend at 10% out of current year profits. The company has earned a profit of 9-10 crores. YZ Limited does not intend to transfer any amount to the general reserves out of current year profit. Are they allowed to do so? See, if you know this, yes, you'll immediately write. How many lines should I write for this? 4 lines. 4 lines. These 3 lines. These 3 lines plus answer. Therefore, YZ Limited is allowed to decide not to transfer any amount to the general reserve out of current year profit. So how many lines I have to write? Sirf 3. 4, 4. 1, 2, 3 or conclusion. That's all. You may not get 3 marks, you get 2.5 marks. Please learn how to write answers. Don't write blah, blah, blah. In a professional examination, it's not like a university exam where you will be marked based on number of weight of the paper. No. They will be going whether the point he has understood. So what are they expecting? This. Okay. This is my humble suggestion to you. Let's see if you have any questions or any comments, etc. And yeah. So one beauty is, if it is surplus, you can declare dividend at any time. Now we are going to see that in the next topic, which is for reserves, you cannot take and declare dividend casually. There are certain conditions to be satisfied. For surplus, nothing. Surplus, kya hai surplus? P&L ka balance, yeah. See, above the line, hai na, that is your, of course, in the new format, Schedule 3, you don't put above the line, below the line. At the end of the P&L account, you will have profit for the year. Now, this profit for the year will be taken to the schedule. So, possibly there will be a Schedule 2, which will be reserves and surplus. Number 2, I'm just guessing, okay? Could be any number. And Schedule 2 will be reserves and surplus. Now, in that schedule, they'll give all the reserves, including P&L account. So, they'll say P&L, profit and loss account, balance is on 1/4/2024. Then profit for the year from the P&L account. Then transfer the reserves, if any. Okay, all that they will make all the appropriations and then balance carried down. That will be that in the total of reserves and surplus, it will go to the balance sheet, right? And that will be reflected in the balance sheet. So just for your clarity and things. Okay. So balance in P&L account, always available for declaring dividend. Always available for declaring dividend. Reserves, no. There are going to be extreme conditions. Okay. Reserves is for the future purpose, for contingencies. So they want to be, they say don't take it unless you really want. As an accountant, please understand, it is not as if these reserves have earmarked assets. These reserves are represented by all the assets. unless you have specific earmarked assets. For example, debenture redemption reserve can have specific debenture redemption investment. Specific. Could have. Depreciation fund could have reinvestment. Normally they won't. Because think about it. Why invested in, say, treasury bond or bank deposit, which will give me 7.5% or 6% taxable, when my own company is giving me 18%, 20%. Yeah, you got my point. It will be reinvested in the company itself. This is something that you should always remember. As a future CFO of a large company or even a CEO, you have to think, why should I put it in other? So that investment should be extremely good. Only then you should put it there. Or a certain portion of your surplus can be and reserves can be parked in liquid investments. Just as for example, Corona came. Who were all successful? Those companies that were able to have some liquid reserves. So they were able to handle. They were able to tide over 6 months to 9 months. By then, things started happening. Money started coming in. But those companies that had nothing, liquidity zero, they were all struggling, crying, committing suicide, going depression. That is when our enlightened Prime Minister said, don't worry, MAF, I'm giving you MAF. You don't have to pay interest. You don't have to pay EMI. Revive. You take a loan also if you want. But that is not a good idea. Better, you have your own deep pockets to rely on. Is the plan. So, correct, sir. Correct. Thank you for confirming that, that you would love to read about Seshai. There's no book. See, I wish, books can be written about people like him. See, one point before I go away from Mr. Seshai. Mr. Seshai and Jack Welch have one important thing in common, which is what I've understood. Because Jack Welch, I've read his autobiography, straight from the gut. Now, Jack Welch joined GE as an assistant manager. He was a chemical engineer. That's the only difference. Jack Welch was an engineer. Seshai was a chartered accountant and company secretary cost accountant. Jack Welch joins GE, assistant manager of the chemical plant. That's it. He becomes CEO. In only one employer. Mr. Seshai also joins only one employer. Straight away becomes CEO. Think like that. Nowadays, we find people are flitting from one company to another company. See this man, so it's loyalty. The founders and promoters, how confident they'll be with him. That is why you have to read his story and find out how it was possible, his ethos, why he thinks like that. Okay. Declaration of dividend when there is inadequacy or absence of profits. Before we go there, the time now is something like 7:40, nearing 7:40. So let's have a small break, after which we will start again. And today also what I will do, I'll stop around 8:15 and do some MCQs. Okay, we'll do some MCQs also. Right. Navneet, what questions are you talking about? I have answered now. They are all visible here. Can you repeat it in case I have missed it? I answered here. You are not listening. I answered. Hello, I answered. What I suggest, no, you download this video. You check it out. Specifically, I answered. I gave you example of capital reserve from amalgamation of companies, which is not realized in cash. Okay, that's about it. Don't break your head too much. If you don't leave, no problem. I answered this question, sir. Capital profit not realized in cash means I answered. And it's visible, very visible. Don't worry. Why is that limited? What will do with the rest profit? See, friends, declaration of transfer to reserves, if it doesn't do, this amount will be lying in the P&L account. This amount will be lying in the P&L account. No need to give any, disclosure or anything like that. It's my money. What's your problem? You may declare a dividend. That's what. Full discretion to the board. No need to answer to anybody. Okay. There is no, answering Mr. Mustafa, there is no percentage or specific transfer to profit in reserve. No. There is no, note it, sir. Please note it, Mr. Mustafa. I'm answering your question. There is no compulsory transfer of any percentage of profits to reserve in the new law. Okay. The new law. Old law it was there. The Purana Valame it was there. The Naya Vala it is not there. They removed it. Thank you. I'll say, Kuldeep ji, that is not the idea about Southwest and all. Everywhere there are people who are brilliant. Everywhere. India is Mera Bharat Mahan. Everywhere we have brilliant people. Except I know these people. That's all. I'm sure you know somebody who is brilliant. So everywhere there are, and I'm sure Kuldeep Nagar will be a great chartered accountant. Every one of you will be mentioned by some other faculty like me. Maybe 25 years down the line. Okay. Don't worry. Aim for that. Okay. Okay. Now let's have a small break and then come back. Right? Sir, small break, sir. Welcome back, my dear friends, and I hope there have been no further queries during my absence. See, now this is a very important topic from exam point of view, right? It's frequently tested area. You can check it out also from the past question papers. You will find that this is a frequently tested area where they have continuously tested you. So basically, this is a situation where there is no adequate profits. What do you mean by that? There is no balance in P&L account. Loss hai. Or profit is there, but not sufficient for declaring the dividend that they want to declare. Suppose they want to declare 15% dividend. The amount available in P&L account is not worth that much. It's not that much. Whatever it is, adequate profit is not there or no profit. There are no adequate, no or not inadequate profits. Okay, for declaring the dividend. Then they can declare a dividend. The company can declare a dividend out of the profits of any previous year transferred by it to the reserves. Right. But declaration of dividend out of reserves is strictly controlled by Rule 3. Strictly controlled by Rule 3. Right. So, no dividend shall be declared or paid by a company from its reserves other than free reserves. So already we mentioned that. What is free reserves? We have already seen it in the definitions. Basically, free reserves means reserves which are, as per the latest audited balance sheet, available for distribution as dividend. So okay. So it's a circular definition now. They say don't record a free reserve. What is free reserve? Not available for distribution as dividend. In other words, it should be generated out of revenue profits. Okay. The only exception is where a capital asset is sold and the profit is realized in cash. In which case, you'll bring the capital profit into the P&L account and use it for it. It should be realized in cash. Money. That money should come. The following shall not be treated as free reserves. You are aware of that. Any amount representing unrealized gain, notional gain, revaluation, etc. Also, any change in carrying amount of an asset or liability, which is based on measurement of the asset or liability at fair value. So when you, sometimes the accounting standards, mostly not accounting standards, in India, yes, you will find there is a compulsory measurement of asset or liability at fair value. It's a very peculiarly IFRS India is concept. When they do that, the books will show a certain value, but that will be only notional. That won't be real. Okay. To that extent, you have to remove the amount. And only on the okay. See, to understand this, you should study India, then you will understand. There are so many adjustments to be made, mark to market, etc., etc. You understand? We come to India. So 3 conditions have to be satisfied. 3 conditions simultaneously. Simultaneously, meaning, but all of them have to be satisfied. Okay. First condition, the rate of dividend. The rate of dividend should be less than or equal to the average dividend declared by the company in the immediately preceding 3 years. Same as interim, but be careful here. There's one important difference. I told you now. So, rate of dividend should not exceed, that is, should be less than or equal to the average rate of dividend declared by the company in the immediately preceding 3 years. 3 years. But suppose in any year, the company has not declared any dividend, this condition shall not apply. If the company has not declared any dividend in each of the 3 preceding financial years actually, but that's how they do it. So, here they say this condition shall not apply. Whereas there you saw, I told you how to compute. It will be reduced. If in 1 year you have not declared, it will be reduced. If in all the 3, nothing, 0. That's all. Whereas here, in case in 1 year you have not declared the dividend, or in each of the 3 years you have not declared, or in 1 year you have not declared also, this condition shall not apply. Straight away you skip and move. But if you have declared dividend in the last 3 financial years, then the rate of dividend to be declared by you shall not exceed average of the immediately preceding 3 financial years ka rate. Okay. I've given us a formula, RD1 plus RD2 plus RD3, where RD1, RD2, and RD3 are rates. Just for easy memory. See, you remember this formula, but you have to write in the exam. You can't write the formula in the exam. Okay. Just for your memory. Okay. Quantum. Quantum means amount. Quantum of Solace. No, there's a Bond movie. Am I correct? Quantum. Quantum means amount. Some amount to be drawn. What is the quantum to be drawn? Okay. That is total amount that can be drawn from accumulated profit. So that cannot exceed, that should be less than or equal to 10% of paid up share capital and free reserves. Paid up share capital and free reserves. Okay. So please understand, first I have to compute the average rate. Then I have to apply that average rate on my paid up capital. Now, I will get an amount now. When you give an example, you will understand. I will give you a numerical example, you will understand. But right now, conceptually, you understand. So I calculate the average rate. I get 10%. My paid up capital is 1 lakh. For example, 10,000 shares of rupees 10 each, 1 lakh. Simplicity. So my average rate is 10%. So on 1 lakh, I can declare a dividend of 10,000. But there is a rate condition, right? Suppose my average rate is 25%. Average rate is 25%. My paid up capital plus free reserves is 1 lakh plus 1 lakh, 2 lakhs. Okay. My paid up capital is 1 lakh. Just for example, we'll work out one more example. Just for quick memory, I'm doing this. 1 lakh PC. Sorry. 1 lakh PC. 1 lakh free reserves. So, इसका total है 2 lakhs. Now, on that, I compute 10%. I get 20,000. Keep it on one side. 20,000. On the other side, I have computed the rate, average rate. That's coming to 25%. On what? On paid up capital. Am I correct? That comes to 25,000. Am I correct? Because you apply 25% on PC. 1 lakh. So that comes to 25,000. Now, first condition says you can declare average rate 25%. But second condition says the amount cannot exceed 10% of PC plus FR. Right? So then 25,000, it cannot be. You have to restrict yourself to 10% of PC plus FR, which is 20,000. Got it? We'll explain with one more example. Don't worry. This is mainly meant to. Now comes the third point, okay, which is balance of reserves. Means how much dividend I can pay? 20,000. After payment of 20,000, what will be my free reserve? Am I correct or not? How do I use the free reserve now? So 1 lakh minus 20,000 balance reserve. The balance of reserve will be 80. 80, na? 80. Right? They say, so balance of reserves, 1 lakh is the free reserve. I am going to draw 20,000 because that is the amount I can draw now. So minus, I get 80,000 rupees is the balance. Now they say the balance of reserves after such withdrawal shall not fall below 15% of PC. PC is 1 lakh. So 15% of this, 15,000. So they are saying the balance of reserves should not fall below 15% of PC. So 80,000 is more than 15,000. So the balance of reserve is more than 15% of PC. Therefore, all three conditions are satisfied. You can declare dividend at the rate of 20,000, which will amount to 20% of the paid up capital. So I've given a offhand, just like that, I'm giving one example. But I will also work out a very systematic example with which we will try to understand. And so, Mr. Navneet Maurya, I gave one very simple example. That itself should have made you understand. So, can you confirm to me whether you have you understood? Yeah. But don't worry. I'm going to now work out a detailed problem. A detailed problem. So I just to help you, see, if I keep on talking blah 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 blah, you will get bored. Navneet Maurya says, do some example. Correct. I have done an example. But I'm now going to actually do a proper question. In those days, this question was there in my textbook. Now I have given the copyright to Institute. It is there in our Institute material. When the Institute wanted me to revise it, I said, take it. Because what is there? Yeah, Buddha, okay. I'm already, see, I'm now 60, but unfortunately my practice is growing and my people are there. I don't want to, I'm looking for good young partners. If they come, I'll give it to them in another 5 years. I will go for Vanaprastha. So my son is coming, he's an advocate, he's coming, he'll take up. I'm planning to go for Vanaprastha. What is there? So that being the case, what is yours that you can take it with you? Even your knowledge you cannot take with you. You think today I'm having knowledge, but when the body becomes weak, mind goes, nothing. So whatever we have give, it's my view, humble view. Okay. Okay, coming to the point. Company has a paid up capital of 200 lakhs and accumulated reserves of 240 lakhs. So paid up capital 200. Okay. Accumulated reserves 240. Friends, remember, very, very important. This is a general rule. Whenever we say paid up capital, it includes the preference also. Please note it, Your Honors. When we say paid up capital, we include preference capital. In the exam, don't forget it. When the problem is there, they will give you equity capital, preference capital. Both have to be total for paid up capital. Don't forget. Okay? These are small points that you have to know, and this is across the act. Wherever in the act they say PC plus FR. Not only here, in buyback, 25% of paid up capital and free reserves. No, there also. 10% of paid up capital and free reserves, there also. It includes preference capital. Okay? And it has accumulated reserves, that is free reserves. We assume that all reserves are free. So 240. So PC plus FR, I always call it PC plus FR. PC plus FR means paid up capital plus free reserves equal to 200 plus 240, 440. We'll come to that a little later. 3 years they have declared dividend. Wow. Average rate of dividend, very odd. 22 plus 9, 31. Yeah. So what I'm getting is 10.3333 recurring percentage. The average rate is 10.333 recurring. Therefore, the rate of dividend shall not exceed 10.333%. Okay, 10.3% of paid up capital. That is, so if I apply this 10.3% on 200 lakhs, then 20.6. So that means what? If I want to declare a 10.3%, I can pay 20. I have to pay 20.6. But remember, condition 2, what does it say? The amount to be drawn cannot exceed 10% of PC plus FR. So paid up capital plus free reserve is 440. That is 10%. I forgot to tell you one thing. Let me quickly go back and see. They also say, while calculating this quantum amount, the amount so drawn shall first be utilized to set off the losses incurred in the financial year in which dividend is declared. See, this year there is no profit now. Maybe loss is there now. That loss should be reduced from this 10% of PC plus FR. Only what is left you can use for payment of dividend. Are we clear? This is a point I didn't mention. Now it's clear. See, 44 is 10%. Now loss for the year is 30 lakhs given here. Loss for the year 30 lakhs. Now this loss should be reduced, set off against the 10%. Balance only 14 lakhs. This is the amount available, 14 lakhs. Hence, the quantum of dividend is further restricted to 14 lakhs. So, normally, if it had been average rate only, I would have got 20.6. But now, because of this further restriction, and reduced to 14 lakhs, right? And accumulated reserves after that drawal, which is 14 lakhs. See, the withdrawal is only 14 lakhs. 30 lakhs is only set off. The actual amount withdrawn is only 14. So that withdrawal 14, if I take 226 lakhs is the balance of reserve. This is much more than 15% of PC, which is 200 lakhs into 15%, 30 lakhs. So 226 lakhs is much more than 30% of PC, which is 30. I'm sorry, 15% of PC. Which is 30 lakhs. Thus, the company can declare a dividend of 14 lakhs. If I apply it as a rate, the PC is 200. So 14 by 200 into 100, 14 lakhs divided by 200 lakhs into 100 gives me 7%. This is the rate. So the basic question asked was, what is the rate? That rate is answer. So this is the point. So do you have any questions to ask? Let us see. Correct. Navneet Maurya sometimes gets very confused. No, you got it right. I thought you were reading 141. That's 14 lakhs. Yeah, 14. You are absolutely correct, sir. Super, sir. Super. Sir, out of 3 companies declared for 2 years, then also sir, first condition will not apply, Vedantji. Even if 1 year you have not declared, first condition will not apply. It has declared for 2 years, no problem. 1 year, 2 years it has not declared, only 1 year, no problem. If all the 3 years it has declared, condition apply. If not, not apply. Okay. Beautiful. Now, for those of you who want to try your hand at multiple choice, here we go. Paucity of profits. An Indian company proposes to declare dividend out of its general reserves. Free reserves. Free reserves, you have to first find out. See here, 10% preference shares hai, equity bhi hai, general reserve hai. Securities premium, can I use for declaring dividend? No. Securities premium can be used only for 5 purposes, which does not include declaration of a dividend. You can issue bonus shares or buyback, but not declaration of dividend. Can I use capital redemption reserve? No. Okay, can I use any designated reserve? No. They are not free reserves. Okay. I'm sure the faculty who taught you free reserves would have mentioned all this. Also in buyback, you would have gone through this again. Same concepts would have been taken up there also. Credit, see, securities premium account can be used for buyback, but not for declaration of dividend. Credit balance of P&L account. Net profit for the year. See, here there is one peculiarity. That is, there is a preference dividend of 10%. So there are many ways of looking at it. Let us see what you are saying. No, NO. I don't know. What man? Okay. Any answers? Quickly. Any answers? It's a little tough. I don't know, boss, what they will ask in the exam. Maybe exam-oriented problem, I'll see if I have it right. Yeah, generally they will ask this question. May not be as tough as, see, I'm giving you illustrations and examples to help you to understand thoroughly. But in the exam, they may not ask so much. I don't know, honestly, see, institute, who can predict here? 12%, 10%. Okay, let's see the answer. Let's see the answer. See, there is one small peculiarity here, which is the so-called preference dividend. Let us see. Average rate is 15%. Therefore, average declared at 15%. Agreed. PC is 40. That is 10 plus 30, 40. Plus FR 10. Assuming all reserves are free. 50 lakhs. 10% is 5 lakhs. Now, this 10% should be first utilized for paying preference dividend 1 lakh now. So that leaves me with the balance another 4 lakhs. So rate of dividend is 4 by 30, 13.33, which is less than 15%. Right. Now, free reserves is 10. Amount to be drawn, 5 lakhs. Balance of reserves, 5 lakhs. How I get free reserves? 10, 8 general, securities premium, no. Credit balance in P&L account, have. Net profit for the year, have. That is 2 lakhs plus 8, 10 lakhs. Out of that, I am drawing 5 lakhs total dividend, meaning 4 lakhs for equity, 1 lakh for preference, total 5 lakhs. You got it? Balance of reserves after that drawal is 5. Paid up capital into 15% is 6. The balance of reserves is less than 15% of this condition is not fulfilled. So the amount of dividend is 3 lakhs and percentage is 10%. You can't go beyond that. Okay. If you go beyond that, if you want to declare 13.33, you cannot. 3 lakhs you can. Then what happens? 5 lakhs equal. How I got 3 lakhs? See, friends, if I declare 3 lakhs, then this amount to be drawn will become 4 lakhs. 6 lakhs it will become. Balance of reserve will become 6 lakhs. 15% of paid up capital will become 6 lakhs. So it will be equal. Therefore, I prefer 3 lakhs. In other words, you are satisfying rate condition, you are satisfying quantum condition also, if you want to declare 4 lakhs, but if you declare 4 plus 1 lakh preference, the balance of reserve will go down. Therefore, okay. 10 is the correct answer. Okay. 12 is nobody's answer here. Because 12 is not going to come. Okay. If you have any doubts, you can ask me at this stage and I will definitely answer. Because this area is slightly, it's a numerical area. One of the few numerical areas here. And so what I'm going to do now is stop here. Stop here and go for multiple choice questions. Maybe I'll just go for this and then stop. We won't go to unpaid dividend today. We'll take it up tomorrow. We'll stop here. Certain companies cannot declare a dividend. There's a prohibition where a company fails to comply with the provisions of Section 73 and 74 relating to acceptance and repayment of deposits. Friends, you have studied it earlier. You have studied those 2 chapters. You know the various rules, conditions, percentages and all. If you do not, especially repayment. But here they are not talking about only repayment. They are talking about compliance with 70-31. Everything should be complied. Then if there is any default, you cannot declare a dividend. So long as such failure continues. You correct that and then you... Okay. This is very important for you from auditing perspective also. Because as an auditor, you should be careful. If that company is going to declare dividend and you find that they have not repaid deposits or not issued the statutory advertisement, something, then you can point out and say, boss, your proposal to declare dividend is not valid. Please rectify that. And then you declare dividend. Otherwise, they will qualify. Either you have this. Okay. Section 8 company prohibited from paying dividend that you know. I mean, I only got, I think, Section 8. So, see, basically the definition is this company will not declare dividend and it will apply its profits to promoting the objects. Therefore, okay. So we will stop here, but I will go for multiple choice questions. Maybe about 5 or so we will do. Unpaid dividend, I'll take it up in the next class. Don't worry. That is on Wednesday, we will take up unpaid dividend and all. Right now, let's go to MCQ. Wow. Okay. Are you ready? These are all easy. So you can quickly answer and I will proceed. They just meant to check whether you have been attentive and whether you have understood the principles. Yes. If you feel insulted by the question, my apologies to you. Hey, what in D. Yeah. Navneet, how yeah, boss? All yeah, D yeah, all yeah. Navneet, my suggestion, no, don't confuse yourself. See, can you not declare a dividend out of all this? Check it out. You go to the, okay, wait, you go to the, uh, D is the correct answer. See, I explained now. I, I think, Navneet, you are not concentrating when I am talking. You are thinking of next question to ask. So that when a topic is being taught, you are missing it. I specifically told her, see, government may have a collaboration with the private sector. So they might want the private sector to bring some money. Government also will bring money. Then they might say, in case the profit is not there or some the adequacy is not there, they will protect your IRR. Minimum dividend, I will see to it that you get. They guarantee that. That amount can be used. Okay, even if there is no profit, the government gives you pay. Don't worry about profit at that time because this is alag hai na. Profits of the current year hai, profits of previous years hai, money provided by government hai. So even if you don't have profit, you can use the money provided by the government. This could be for a private public partnership or for a something. Okay. So now need confirm that you have understood C because you specifically wanted me to explain. I have explained. B, no. B also one of the sources. A, B, C, all are sources. Okay. If you don't, I mean, go back to the institute material, see. You will find clearly it is there. Easy. Easy peasy. Transfer to general reserve is not compulsory. It is not compulsory. CRR is nothing connected with this topic. CRR is for redemption of preference shares, buyback, etc. Bonus shares, good job. So answer is schedule 2. Depreciation, correct. Yeah. Beautiful. All of you are 200% correct. Okay. Now, I mean, this is more of a revision, boss. Don't think I'm testing you. Just a recap for you. Again, D. Everybody got D. See, B is one of the conditions. All of them have to be satisfied. So D is the correct answer. B is only one of the conditions. Okay, so all have to be satisfied. D is the correct. See, this is the problem with multiple choice. Sometimes the answers will be very simple. Absolutely correct. All of you have got it right. None of you has got Every time I say none of you, one person gives the answer. Sir, security premium cannot be used. Na? Security premium strictly prohibited. 5 items are there, out of which declaration of dividend is not there. Revaluation reserve cannot be used. It's not a free reserve. Capital reserve, it's a little doubtful, but in MCQ you have to be a little smart. If you are definitely eliminating B and C, 50% no, 50% sure elimination. So between A and D, you have to select the more appropriate. Free reserves is the more appropriate. Okay, that is all. See, answering MCQ also is an art. Don't think it's just like that you can do. You should know how to think logically and think. Okay. Yeah. Okay. Register of companies, central government. They're all getting angry and but be correct. Ah, this is not in your, we have not covered it. So at this stage, I'm stopping and I am going to sort of stop share. And if you have any queries further, you can ask me. Every query will be answered fully. Any query will be answered. No query will be left unanswered. Okay. Yeah, B is the correct answer. All of you are correct. I'm just giving you another 2 minutes to ask me any doubts that you might have or anything you might have. Okay, since we seem to be having some time, we'll do one thing. Why waste time? I will share again and I will cover unpaid dividend quickly. I will cover unpaid dividend again. So let me. Yeah. I'll quickly cover unpaid dividend. Only the basic framework today. Basic framework. Today, tomorrow we will take up the provisions, then investor education protection, then MCQs. Okay. See, basically, when you declare a dividend, it has to be paid within 30 days. Dividend should be paid or claimed, paid within 30 days. It may not be claimed. That's not my problem. But where a dividend is not paid, that is an offense. But if it is not claimed, I can't do anything about it. But whatever it is, even if you have not paid the dividend, you have to transfer it within 7 days from the date of declaration. Within 7 days, within 7 days from the end of 30 days. You have to pay within 30 days. You are not paid. Then within 7 days from the expiry of 30 days, you have to deposit it in a account called unpaid unclaimed dividend account for so-and-so company in a separate account. If not done, you have to pay interest at 12% per annum from the date of default, 30 days now. So on the expiry of 30 days, default. So from that day, you have to pay 12%. Okay. Then that is over. Money is transferred. Now, within 90 days, you have to prepare a statement of the name, last known address, etc., and file it in the unpaid dividend amount and put it up on the website of the company and the website approved by the government for this purpose. So 90 days from the date of declaration, you should prepare a statement, send it. So 30 days pay, 30 days ka baad, you transfer. After 30 days, you transfer within 7 days from the expiry of 30 days to the separate account. If not, you pay interest from the date of default, 12%, very high. Today's, you check out the going rate, very low. And you then prepare a statement within 90 days and put it up in your website and also the website approved by the government for this purpose. And then keep quiet. 7 years. 7 years it lies in that account. So that in case the person wants to climb, they can always come to the company and get that money. 7 years we give him. Okay. But if it's still lying in that account, still, even after 7 years, 7 long years, okay, 7 long winters and short summers, it is still lying in this account. Then you transfer it to the Investor Education and Protection Fund. It's not IPEF, it's IEBF. Investor Education and Protection Fund. More about this fund tomorrow on Wednesday. Right now, because I don't want to waste even 1 minute of your time, because your time is precious. You're preparing for the exam. So I want to cover one more topic now itself. Okay. But tomorrow we will cover it. I mean, tomorrow, not tomorrow, Wednesday. Whenever I say tomorrow, it shall be deemed to mean the next day on which our class is there. Are you able to see how law works? Legal fiction. Whenever I say tomorrow, it shall be deemed to mean the next day on which our class is to be held. This is how law works. Okay. So whenever I say tomorrow, don't say, sir, not tomorrow, sir. Wednesday. You are right. Okay. See, law is a little funny, but once you like it now, or once you get around it now, it's very fun. Good show, yeah. Let's call it a day and hope to meet again on Wednesday, inshallah, when we will continue with the topic declaration and payment of dividend. Bye. Sir, class over, sir. Ji? Yeah.